What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting and trading method we use can be implemented with any company that's publicly traded on the U.S. stock market. So make sure you hit that like button if you enjoy the video. Really helps the channel grow. Thanks to those who continue to tune in and hit the thumbs up. Really means a lot to us. Make sure that if you haven't already, hit the subscribe button and notification button as well. That way you are notified when we release new videos. We do release bonus content from time to time. Now, the nightly and weekend videos, like tonight's video, we mostly focus on identifying triggers and targets for trades, short-term, scalps, intraday trades, all the way up to long-term swing and leap trades as well. So if you want a deeper dive into how we set up the charts, the color coding for the different time frames, using the broadening formations, things of that nature, make sure you check out the bonus content on our YouTube page. And for more free information about the strat, which is the base of our charting and trading method, you can find more free information in the description of this video as well. So I encourage you to watch the full video, because we do go over the triggers and targets, but we give some pretty good insight into the price action on all time frames. So let's go ahead and look at the agenda for today. We'll go ahead and recap today's price action, then zoom out like we always do. Look at the week, month, quarter, and year. I think that's especially important this week since we went 2 down on the week. Then we will look at the market maker's expected move for Friday, October 7th. And we will set the 4-hour markers and triggers and targets for Friday, October 7th, along with a quick review of the triggers and targets for the week, month, quarter, and year. So just looking at today's intraday price action, we will look at the scalping chart first, because that's where we made all the money that we made today. From a shorting perspective, we can see the 4-hour markers here on the chart. Up at the top, we have the previous high of day, 48.43. A little bit lower, we've got the overnight high of 47.76. Which, just honorable mention here, is just below that 47.95 mark, which is the 50% level of last week. Then we've got the overnight low here at 45.65 and previous low of day towards the bottom of the chart at 43.21. So previous high of day, overnight high, previous low of day, and overnight low are the main 4-hour markers. And then we have to wait till price opens to get our opening print, or the first trading price of the day. So we see that in the middle of the chart here at 46.46. Now, if you're not familiar with this channel, there's a pretty general rule we go by, especially in the morning at the beginning of the trading day. We're looking for higher lows at or above opening print, and we want to get into calls. Now, if we see lower highs at or below opening print, we want to get into puts. Now, you can layer some nuance in there, but if we want to just strictly by the rules, those are the rules. Lower highs at or below opening print, we're getting into puts. Higher lows at or above opening print, we're getting into calls. So we can see here we had the opening print at 46.46, a tiny bit of movement up, but not much. So we went ahead and took the put, because if we bring in yesterday's price, or the previous day's price action, Wednesday, the last high we had was up here, a soft high right here with this 3, and then as well here with this 3. So from a pure candle structure perspective, this 2 right here, this 2 up, was a lower high, right? So we had the high and then an inside candle, so didn't push down to lock this in as a lower high, but we continued to push a little bit higher, and then we got the 2 down here to lock in the lower high. So as soon as we went below this the low of this 2 up candle, we went ahead and entered puts. You can see we're right at that opening print level, and we went ahead and got the push down to last week's low. Now, we expected some sideways action at that point, because that's price action stopped there last week, so why would it not be fought over again this week, right? So it's a point of inflection, and we did see that we got a little bit of a sideways action, and then finally a lower high, and the final push lower. Now, we exited most of our position at the previous low a day, just because it was shorter term, and we do have some puts for next week that expire next week that we swung, and those were continued to go up. We knew that we had the gap below that we could still had the possibility to fill, but we've talked about this over and over on this channel, how the gaps can actually be a bounce point, right? If you're approaching them from above, you can bounce off of them. If you're approaching them from below, you can actually reject off of them. So that's another reason why we exited a majority of the position, of the short position that we bought this morning. Kept the ones that we had swung, and then I think there was only 2 runners we kept from the contracts that we bought in the morning, this morning. And we got the sideways action, dipped into that gap a little bit, but hit what else we pointed out yesterday, which was last month's 50% line, which is this 42.37. Now, if we pull this up a little bit more, we can see the market maker's expected move low was 41.87, and we've also talked about how intraday the half gap level can be a bounce point as well. So from a full day perspective, this is just looked at as a wick into and basically a bounce off of that level. From an intraday perspective, this was a little bit of exploration of price action, but bouncing off of the midpoint of this gap and bouncing out of there. So, we price reacted basically how you would, I don't want to say how you expect it to. It was an orderly drop, right? So we got the lower high, lower high, lower high, right? Just orderly going down, and then the chop at a very specific level, sideways, right? So the day went how you would probably want it to go. We could have had a bigger drop. Gap fill would have been nice as well, but from the beginning of the day perspective, it formed a nice orderly downtrend. And then for any contracts that don't expire this week, and maybe even next week, just depending on where your entry was, it leaves you room to a little bit of wiggle room to let it pull back or push back up, I should say, and allow bears to get back in with the lower high. And just talking about that lower high, if we go to the 1 hour chart, we can see that we ended up putting in a lower high. Let me get a better chart out here. All right, so we ended up putting in a lower high and creating basically another downtrend, right? So here was the lower high from before. I forget that there's people on phone, so let me make this bigger. We can see this was yesterday's action. This was Tuesday's action and Monday. So we can see from Monday to yesterday that created this lower high. We've got a slight downtrend on the hour, and then we actually went in and put a lower low. So here's the low, lower high, lower low. So we're still in this downtrend from the 4 hour perspective. If we pull out the 4 hour chart, we're still in a downtrend here as well, right? It's not extreme or anything like that. It's only the second lower high in the second lower high in the succession of downtrend of lower highs. And we just barely got this lower low, but technically that is a downtrend. So you could have bought the bounce off of the gap if you believe that that's where we were going to bounce from. Again, it lines up with last month's 50% level, market makers expected low. So from a risk to reward standpoint, that could be a nice place to bounce. But I wouldn't get too far ahead of yourself as far as this is by the dip. We're going back to the highs, right? Because once again we put in a lower high and a lower low on the 1 hour and the 4 hour. Now the day we also locked in a lower high. Get a little cleaner chart here. Oh, again, think or swim. Come on, work with me here. All right, there we go. So from the daily chart, the 1 day chart, we can see we've locked in a lower high here as well. So lower high, lower low, starting a downtrend. We were already in a daily downtrend technically, so just steepening that downtrend. So I think it's a good possibility that we fill this gap tomorrow. Let's see, overnight we are up a little bit overnight. So just looking at the individual, we're about half red, half green from as far as the top 10 holdings for SOXL overnight so far. Again, not too far into overnight action just yet. So there's a lot of room for things to move, but from the day and down, we're in a downtrend, right? Or the day and shorter time frames, right? So the day, 4 hour, 1 hour, we're in a downtrend. So we want to, make sure that you're monitoring any November monthly expirations for any calls you may have that you're swinging. You make sure that you're not jeopardizing profit, too much profit. You could wait to see what's going to happen at this level. Are we going to get the bounce? But if we get another gap down tomorrow, maybe gap in this gap and push down to last quarter's high, you're giving up a lot of profit here. So we do have one more possible bounce point here around this 39.40 area where we've got a fib extension from that bull flag from April to July. But again, it's just a fib extension. It's not a hard pressed level or broadening formation or a strat magnitude or anything like that. So there is the possibility we bounce there, but there's just as much possibility we go back and test last quarter's high. All right, so I think that we've kind of beat this to death. Looking at it from the day and shorter perspective. Let's zoom out a little bit here and look at the week. Bring out our week chart, and you can see again we have triggered this 2 down, right? So 2 up, 2 down. The magnitude for this move is the low of this 2, so quite a bit more to go. And if we were to make that all in Friday, we're just testing the 61.8 fib extension from that bull flag I just talked about. Let me make this chart a little bit smaller, bring this in. Sorry for those on phone who still might not be able to see it as well, but you can see here we've got the flag pull, we've got the flag, and then here's our extensions, right? So again, a pullback even to that 61.8 fib extension here at around 35, 36, not the end of the world. From a higher low perspective, we've got all this room that we can put in a higher low. So we've got the downtrend on the 1 day, 4 hour, 1 hour. So I mean, if you're waiting to get into puts, maybe this is a little early for you, I guess, but we've got downtrends going on those time frames. So it doesn't mean you've got to sell your January calls or anything like that, but just recognize that we are looking at a good a decent pullback for at least for the run that we've been in, right? We've just been up. So this is more than just an intraday pullback, everybody buying the dip and continue to run higher. This is a more significant pullback from that standpoint, and it could give you a good chance to not only make money on the way down, but get better positions for January calls, even December if you want to look at that perspective, but January and beyond, you can get some pretty good entries there, right? Especially if we're not going to pull back any further and we're going to keep ripping up to this 70.08 magnitude that we've got for a lot of the strats, right? From the month perspective, let me pull out a cleaner chart. There we go. Again, we're still inside, still in the upper half, no longer just in the upper third of last month's action, but we're still in the upper half. Even if we close this gap, if we bounce off that gap, it's just been an exploration to the 50% level of last month, and hopefully we get that bounce and continue to move up if you're a bull. But again, a lot of room to pull back before we could set a lower low on the month perspective too. So it's out there. Just as hard as we were ripping to the upside, SOXL is a triple leveraged vehicle, so it drops pretty quick as well too. So I'm not calling for that on the month time frame at all. Not even really on the week, right? Or as far as like a lower low. We talked about plenty of room to put in a higher low. So I'll quit talking about that. From the quarter, we are still in the 1 combo 2 down, combo 2 up, right? Here's the 1, here's the combo 2 down, here's the combo 2 up. Magnitude for that move is all the way up here at 70.08, and as long as we're above the 36.15, that strat is in force. So nothing really to worry about in that sense. We're about halfway through, a little more than halfway through actually not even halfway through the quarter yet. So could we be pushing down just to push back up at the end of the quarter? Quite a good possibility. We met our rejection point here at last year's 50%. So just want to continue to monitor it. And unless we pull back below this 36.15 level, I'm not really too worried about it. But we will keep our eye on it, seeing as how the day and lower are in downtrends right now. And on the year, we talked about this before. We've turned things around. We had the 1, 2 up, 2 down trigger earlier on in the year, but we were able to stop short of the magnitude, giving us a higher low. Hammered up, giving us a green candle, starting to form a little bit more of a wick on top than what we would really like. But it's again a long ways till at least a month and a half till the end of the year. So we've still got time to push that back up if we're pulling down for this lower high here. All right, so nothing really to worry about from the month and above, really even the week. The week you just want to watch for where we are going to make that bounce, because right now, like we talked about, we're in a downtrend on the day and in the 4 hour and the 1 hour. So that's what we've got for that. Let's zoom in here a little bit and talk about the expected move for Friday. And here we go. Let's pull up the. So if you want to find the expected move for tomorrow, go ahead or Friday, whenever you're watching this, go ahead and pull up the options chain for this week. And here on Thinkorswim, if we look over here in these parentheses, we see a plus or minus 3.011. That means the market makers are expecting a plus or minus $3.01 move, right? So the close, of course, today is 43.01. So if we go to our notes and we look at our expected move notes, we can see that we've got 301, and with the close of 43.01 on Thursday, that means the upside we've got 46.02 and downside 40 flat. So about a $6 range here, plus or minus. And if we go back to the charts, we can see again all of our orange markers are for the day time frame. So we can see market makers expect to move high here at 46.02 and low here at 40. So that does kind of lend itself towards closing that gap and pushing lower. But we could always just sideways hang here a little bit underneath this day downtrend line for another day, and then we'll see what happens on Monday. But it does show the market makers do expect price to stay lower and not be running so high, right? So if we go back to our scalp chart and we zoom back in and we look at our 4-hour markers and the triggers and targets for Friday, October 7th, just bring everything back into frame here. We can see that we've got there we go. 4-hour markers on the board here. Up at the top of the screen, we got previous high a day. The bottom of the screen, previous low a day. And as of right now, the overnight range is pretty tight, but it's down here. Overnight high 43.48, overnight low 42.90. Right. Again, we've got our expected market makers expected move high for Friday, up here at 46.02. Market makers expected move low for the week here in purple, right in the middle of the gap, and then the market makers expected move low down here at 40 flat, right? So let's just say we get a little bit more push up overnight, and the overnight high is up here around 44.60 or whatever. And we're looking at things from a scalping perspective at the open of trading tomorrow. If we get an open, say in the middle of overnight price action, right? We want to be just following the basic rules that we talked about at the beginning of the video, right? So higher lows at or above opening print, we want to get into calls. Lower highs at or below opening print, we want to get into puts. So if we open here, we push up, say we get a rejection off of overnight high, we push back down just to get a higher low here at or above opening print, we want to get into calls. Now the first target would be overnight high. Not a lot of magnitude there, so probably wouldn't take that. The second target would then be the previous high of day, which is up here at 46.99. So much more magnitude here, much more profit to look for, but you want to keep in mind last week's low is here at 45.14, and the market maker expected move high is here at 46.02. So do you make it all the way up to that 46.99 if we get that higher low at or above opening print? That would be the question, and for you to monitor and use your risk profile and knowing when you want to get in and out. but that would be the ultimate target. Now, if we get price action here opening and we push down, maybe we bounce off of the overnight low and we push back up just to get a rejection or a lower high at or below opening print, we want to get into puts. Of course, the first target in this case would be the overnight low, and then the second target would be previous low day. For definitive targets, you'd have to kind of turn to our 4-hour and day targets, triggers and targets, which we'll get to here in a second. But a pretty easy target at that point would be market makers expected move low, which is basically half gap, and then the full gap close. Right? That's just from a scalping perspective. Let's go ahead and zoom out just a little bit more. Look at more of a full day trade perspective. Looking at the 4-hour chart, right? Let's make this a little bigger. There we go. We can see on the 4-hour, we had the big 2 down in the first 4-hour candle, and then an inside indecision candle for the second 4-hour, but it was in the lower third of the first 4-hour candle. So nothing really too bullish about that candle structure. It does leave a 2-1, 2 down continuation on the board, so that would trigger at the low of the 1, which is 42.84, and the magnitude of the move would be the low of this 2. Again, coinciding with the top of this gap, last month's 50%, market makers expected move low, 4-hour broadening formation. So even if we do trigger that to the downside, we could see sideways action, if not a bounce, right? Now, if the first 4-hour candle of Friday pushes to the upside and goes above the high of the second 4-hour candle from Thursday, that triggers a 2-1. Oops, let me get that out of there. That triggers a 2-1, 2 up reversal. That triggers at the high of this 1 here, which is 44.70, and has a magnitude of the candle to the left of the 1, which is up here at 46.99, right? It kind of coincides with last year's 50% level, which has been a point of rejection in the past as well. Also just slightly above the market maker's expected move high of 46.02 as well. So that all, you can see how that all would play in. And again, last week's low and that market maker's expected move high, you'd have to fight to just to get to that level, right? Looking at the day chart, get a cleaner chart here, right? Again, we've got the downtrend line here, this dashed orange line. That's a downtrend line. Don't want to use the downtrend line itself too heavily, but we do want it on the chart to see where it coincides with horizontal levels, right? So if we do get more push to the downside, because again, we got this lower high, lower low. If we go below Thursday's low, triggering at 42.15, we're obviously looking for the gap close. Market makers expected move low. And then, this fib extension, 78.6 fib extension of that bull flag would be another possible bounce point, being just below this market makers expected move low. Now, if the rug really gets pulled, then we're looking for the low of this candle here, and then this candle, which would be the test of the last quarter's high. I don't know that we'll get there tomorrow. That's a pretty big move, but it's Friday. If people are starting to turn sour on the market because of the downtrend that we're in now on the daily perspective, we could see people just de-risking before the weekend, saying let's just attack things again next week, start fresh and see if we can't turn things around, and that's where you see the price really start to drop. So not calling for that, but just saying be aware of that. Now, if we go to the upside, that gives us at least a 2 down, 2 up reversal strat, which gives us a very clear entry, very clear exit. Not a lot of magnitude, but we know exactly what we're shooting for, right? If we go above 46.99, then we want to see 48.43, which is the high of the candle to the left of this 2 down from Thursday. Okay, that would coincide with this daily downtrend line as well. So even if we do reach magnitude on that strat, don't be surprised to see us move sideways, if not down, depending on how long it takes us to get to that level on Friday, if we do go to that level. Higher target, extended target for Friday's move could be the week flip as well, 49.99. That would get us at least back green on the week perspective, which would put us back green on the month perspective as well, as this is the first week of the month. And then really that puts us in full time frame continuity to the upside, making the week, month, quarter, and year green. So kind of in a it's going to be a fight over this level, and we've talked about that before. Last year's 50%, but we're in conflicting trends now, right? The 1 hour and below, the 1 day and below are in a downtrend. The week and above are in the uptrend, so we're going to have a little bit of chop here, so nothing to be surprised about. Let's go ahead and look at the notes. That way we can just look at the hard numbers, right? So for Friday, November 27th, there will be 36 trading days left in the year, and the close on Thursday, November 6th was 43.04. We know to turn the week and the month green, we've got to reach 49.49, but to turn the quarter and the year red, we've got to get all the way down to 34.28. So I think we're okay there, at least for this week. We know that the market makers expected a move between 53.69 and 41.87 for the week overall. And then specifically for Friday, we're looking at a range of 46.02 to 40 flat. All right, we know we've got that gap up there at 59.30, but we've got the immediate gap right below us here at 42. And then some more below, but they're quite a ways below. So we talked about the scalping perspective, higher lows at or above opening print getting into calls, lower highs at or below opening print getting into puts. So we won't go over that again, but just again, from the 4-hour chart perspective, if we go to the downside, that gives us a 2-1-2 down continuation triggering at 42.84 with the magnitude of 42.15. And I put an extended target out there of 41.47. Now, if we go to the upside, that gives us a 2-1-2 up reversal. Gets us to 44.70 or triggers at 44.70 with the magnitude of 46.99. Now, if we reach that 46.99, that also triggers the 2 down combo 2 up with an extended target of 47.95. All right, so that's from the 4-hour chart perspective. The more intraday, longer intraday plays, right? Possibly overnight swings, but it's the weekend, so I don't know if I would just make an overnight over weekend swing based off of the 4-hour chart alone. That's where I would turn to the day. And we know that if we go to the downside on the day, it's a 2 down continuation, triggering at 42.15. First target, obviously 41.47, which is the gap close. And then we've got extended targets of 39.85 and 39.26. Now, if we go to the upside, that gives us a 2 up reversal with a very clear entry at 46.99 and a magnitude of 48.43. But we have extended targets of 49.49, which again is the week flip, and then 50.19 as well if things really get to rocking. All right, we won't go back to the charts for the week, month, quarter, and year. We know that on the week, we are in force with the 2 up, 2 down, right? 43.01 is the current price, and that triggers at the 2 up, 2 down triggered at 45.14. So we're in force. That's why it's in bold as well as underlined. Got a ways to go to reach magnitude, though, of 35.97. Could it be done in one day? Yes. Do I think it will be done in one day? No, I don't think so. But just keep in mind that that is the magnitude of the move. So if things get moving, that's where you could ultimately be putting your target at, right? Now, if things were to go crazy to the upside, some type of news comes out or whatever comes out and we just go rip into the upside, we could go green 3 on the week, but we'd have to go to 50.76. So $7 move again. Could it happen? Yes. Do I think it will happen tomorrow or on Friday? No, I don't. So not even really worth talking about the extended targets at that point. The real target would be 50.76, and to reach that in one day would be a nice move. Now, on the month, we've talked about how we're still inside, so we haven't gone 2 up, 2 down yet, or 2 up, 2 up. To go 2 up, 2 down, we got to get down to 33.98. To go 2 up, 2 up, we got to get to 50.76. So quite a ways in either direction. So I don't think we're going to trigger either of those on Friday. Now, from the quarter perspective, we talked about how we triggered the 2 down, 2 up. 2 down combo 2 up at 35.49, reached its magnitude of 36.15, which then triggered the 1 combo 2 down, combo 2 up, with a magnitude ultimately of 70.08. But because it's such a big move, we've got our intermediate targets here. Don't think we're going to reach any of those this week, seeing there's one day left in the week, so won't speak too much more on those. And then from the year, we did trigger the 1 2 up, 2 down, but we reversed it, creating the higher low, green hammer or hammerish candle at this point because we are getting a little bit more wick on top. But if we are to go 3 on the year, we'd have to get up to that 70.08 magnitude of the quarter strat. So again, I don't think it will happen, but we've got to kind of put it on the table now that we have run so hard and gotten pretty close, right? We poked into the 50s already, and $20 is not a whole lot for SOXL to move. Again, it's a triple leveraged product, so I don't think that is going to happen this year, but you've got to keep all possibilities on the table, right? So those are your triggers and targets for scalping all the way up through the 1 year chart. and tried to pack in as much information in as possible without taking up too much of your time. So I hope everybody enjoyed it. If you did enjoy the video, make sure you give it a thumbs up. Again, it really helps the channel grow. Another big thanks to those who continue to watch the videos, give us the thumbs up. We love talking to, there's a core group right now that's kind of got some chats going in the comment sections of the videos. So we like conversing back and forth with you guys on those as well. So if you get some value from this video, and you know somebody who you think could get some value from it as well, go ahead and share it. Again, we're a free channel, we're not selling anything, so we just want to try and put out the best information we can, and maybe help make trading a little bit easier for people, right? It's never going to be totally easy. I guess for those every 1 in a million people, yeah, it's easy, but it's never going to be easy, but we just want to make it easier, right? So that's really the video for the day, and the last video for the week, the nightly videos. We will have one more this weekend, so stay tuned for that. And like we always say, if you are watching this on Thursday, we hope you get some good rest tonight. If you're watching this Friday morning, we hope you got some good rest last night, and we hope everybody is refreshed and ready for a great day of trading.